What a hell of a roller coaster ride. Yesterday, we had a rip your face off rally up so much after Powell decided that we weren't going to go up 75 basis points a piece and that inflation wasn't so bad. And then what happens today? Falling off a cliff, down 3.5% on the two major ones, and the NASDAQ down almost 5%. Crazy days. The reason the NASDAQ went down more than the other indexes, I don't even know what the fuck that word is. It's because it's very tech heavy and the techs got hammered. They were up so big since the pandemic. So people are taking risk off. They're getting rid of their risk. So they're selling that, take a profit. And then what they're doing is they're seeing these interest rates going higher and higher on the bonds. So they're starting to take some of the risk off buying those. And if you look, some of the proof of the risk off stuff is here, is that you see that all these stocks are down like, a lot, 4 or 5%. But the utilities, the defensive stocks are only down like 2 or 3%, maybe less than 1%. So that's not getting hit as the rest of the stuff. What the fuck am I saying? I'm like blabbering. There's a lot of uncertainty going into this. So there's no one reason the market fell off a cliff. A lot of uncertainty, geopolitical risk, people getting rid of some of their risk, taking some profits on their tech stuff. Because all the people who bought their tech stuff a long time ago, I think Apple's up like 180% since the beginning, something like that. What's crazy is that even with this volatility, the VIX at 30 is still half of what it was at the peak of the pandemic in March. It was up over 60. So as much as it's crazy, it's not as bad as it was then. And in case you're wondering, the VIX is a volatility index. So the higher it goes, the more volatile the market is. They actually call it the fear index because usually the higher it goes, the more the market's dropping. Not a perfect correlation or negative correlation, if you want to call about it, but that's kind of what it is. So the more volatile the market is, the higher the VIX goes. Now let's talk about the good news a little bit. A couple of the pundits are saying that it was such a broad sell-off and not really a lot of tech, but not really so much one sector so broad. Sometimes that's a sign that we're near the end of a down. Who knows? We don't know this. Who knows what tomorrow's going to be? But hopefully we have some good news coming and it won't be a straight downhill fall for the next 2 months. But again, a lot of people taking risk off the table, taking profits and buying defensive securities like utilities, pharmaceuticals, stuff, alcohol, stuff like that are pretty just steady. Those are defensive securities, okay? But if you look historically back to the 20s, all these little crashes are like blips on the radar. If you look at the S&P over the last like 50, 60 years, you barely can see these drops. They're kind of wiped out by all the gains. If you want to pass the Series 7 or 63 or SIE exam, join me tonight on my live Q&A on YouTube, Capital Advantage Tutoring, 8:30 p.m. Be there.